or can we use it for defending the peg? What are the things we can use it for?
Well, it goes to reserves, and it goes to build up reserves. So it's a source of inflow of foreign exchange into the economy. It's not earmarked for anything like repaying. It's not earmarked for repaying foreign debt or anything like that. As you know, the reserves are fungible. IMF is just one source of inflow into the reserve pool. So I don't see things in terms of repaying foreign debt with IMF money. I mean, that's not how I think about it.
No, but can we use it? Theoretically, what I'm trying to find is, assuming, say, reserves fall to like 3 billion or whatever, or 2 billion or whatever. Can we use your money for debt repayment or defense? Is there any restriction, or it's completely open?
It's not. There's no restrictions on the IMF disbursements. What we do have, as you know, under the program, I mean, we have reserve targets. So those are separate, but they're related. But there's no restrictions or conditions about the IMF money per se. It simply is a disbursement to the central bank for the purposes of bolstering reserves.
Given the current global uncertain environment, how do you see the economic outlook for this year?
For Sri Lanka? Well, I see a couple relationships. One is on the current account, demand for Sri Lankan exports, garments in particular. We've seen those hold up very strong for a number of reasons, despite the slowdown in Europe in particular. And at the moment, demand for Sri Lankan garment exports is still strong. So that's one potential channel, but we haven't seen it just yet. The other one is on the capital account side, as I mentioned before, under what conditions can Sri Lanka raise a euro bond or some of the other sources of capital inflows, private sector borrowing, that sort of thing? That could also be more challenging under the global financial environment.
How about the growth, inflation?
Well, if exports are affected, that'll affect growth. And clearly there's a link between export growth and economic growth. But Sri Lanka has been growing quite rapidly despite a slowdown in I mean, we have to keep that in mind, that it has not, the slowdown in global growth hasn't materially affected Sri Lanka yet. Charged on the IMF money. There's a surcharge on any disbursement of 2%, I believe, right? There's an extra 2% on any disbursement above, what we technically refer to as 300% of quota, of Sri Lanka's quota. And the program calls for the program makes available 400% of quota. So I believe on most of the remaining disbursements there would be an additional surcharge on those disbursements specifically, but not on the whole outstanding stock of IMF lending. Sri Lanka pays about 1% on the outstanding borrowing.
In your statement, you say that we are encouraged by recent adjustment in the monetary FX rate. Does that mean today's policy rate change? Or,
that's referring to today's monetary policy announcement.
Your discussions with civil society and the private sector, what were they most concerned about?
I think there was a sort of a broad view that the economy would continue to grow at a rapid rate. I think there are some where they share the same concerns that we share about the sustainability of the current account. I mean, I think that's broadly appreciated, both by the private sector, by us, and by the government, as they've sort of made clear in today's policy statement. What the private sector again is looking for, and what we're looking for, I think we share that, which is a qualitative shift in policies that are flexible enough to respond to the current account and respond as needed going forward. So I think that's widely appreciated.
Just a clarification on your letter of memorandum of technical understanding. Now IMF has asked to maintain 3.5 months equal import cover on reserve. Does that is it non-borrowed reserves or gross reserves? What's the specification on 3.5 months of import?
Well, when we originally set the target under the original program, as we've discussed in previous press conferences, what we're trying to do is we're trying to target. We're trying to increase the stock of non-borrowed reserves, so that in such a way that the central bank holds a buffer against borrowed reserves. So the 3.5 months is in reference to non-borrowed reserves plus the disbursements from the IMF.
So at the moment it's what you referring to your technical understanding is well below 3.5 months of import.
Yeah, there's a December target that's laid out in the technical memorandum of understanding, and the current level of reserves is below that target. That's why we're looking for a policy response to address, and that's basically the mirror image of the larger than anticipated current account deficit.
The previous visits here, import sentiments deeply involved in private sector activity in the economy. Do those sentiments still persist? And also we had the appropriation bill that is about in Parliament. How will that affect the ability to attract investments going forward?
It's hard to say, but what we had flagged before in previous press statements was that we were hearing from the private sector possible concerns. I think those concerns, are still there.
And on the expropriation bill, would it have any effect on attracting foreign investment?
Again, that's hard. It's hard to say. I mean, I think the government has explained the motivation behind the expropriation bill, which is to utilize underutilized assets, and so I think they broadcast, what the underlying purpose of that bill was, which is understandable. So it's just a question of whether the private sector, fully appreciates the government's explanation or not.
From the last review to this review, except today's monetary policy rate change and exchange rate flexibility, what are the changes you see? What has changed?
From the last review to this one, aside from, today's policy response, I think we regard as the beginning of what we hope to see as a qualitative. We see it as a qualitative change in policy. We share, I think, an appreciation of the issue, and we're hoping that it's the beginning of a flexible response to recent developments, to developments in the fourth quarter.
So apart from that, what kind of things? It's only, they implemented it only today.
Yeah, and there was an exchange rate adjustment in the budget, which can't be discounted. But I think today I would regard the issue going forward as being the flexibility of policies to focus on. I think it's at this stage the government is addressing the developments of the fourth quarter.
If we rely only on interest rates to cure the problem, how much do you think the year-end growth would be around? Will it be like below 6 or above?
Well, I mean, I think again, I mean, I don't want to speculate about what would happen if we believe that there should be a broad set of instruments used, and I think the government agrees with that assessment. So I'd rather, I don't think it's really productive to speculate on what would happen in that scenario. Well, thank you very much again, and it was really a pleasure. And I hope to see you again during our next visit. And Ben will be sitting in this chair. Thank you.